Welcome to Invest in Square Feet. I'm your host, Matt Shields, and today's episode is going to be a blast. We've got Zihao Wang with us, who jumped into real estate at just 16 while most of us were still trying to parallel park. Now he's managing 34 properties and even getting family offices on board to invest in his Southern California empire. Let's get into it and see what makes Zihao tick.
Yeah, so my family takes a very ground up approach when it comes to investing. So we love to be hands on and we love to understand exactly why a business plan succeeded or why a business plan failed. And so naturally, it came to me that we have to start with operations. We have to understand what revenue collection looks like. What are the revenue drivers when leasing season is good, when leasing season is bad, and then what kind of expenses we should expect from different kinds of vintage deals. And at the very basic level, it's succeeding in operations and knowing how to operate an asset. Then what's actually really interesting is that actually matriculates up, because when you move on to the acquisition side, you're constantly looking at deals and modeling deals. And the only way that you know you're really modeling correctly is by having the experience of operations and knowing how much you need to spend on repairs and maintenance, how much you need to spend on payroll, etc. And so by having the experience of an operator, then moving on to the acquisition side, a lot of that experience actually carries over. And then moving on to the capital markets side is more about how you pitch a deal and how you tell a story to an investor, how you tell a business plan. And that goes back to, once again, how you're going to execute that business plan and goes back to operations. So I think from a first principles perspective, operations is the most important because it can, kill your deal if you don't operate the deal, but it can also save a deal when economic times are not great. So my approach to really operations is I really want to be hands-on and be the operator and know why I failed or why I succeeded, which is why I took the approach of starting off as a property manager at the very lowest level and closest to the assets, then moving up the scale to acquisitions and capital markets as I scaled the portfolio.
Yeah, that's interesting. When you're saying how you want to obviously understand how the operations work and what the expenses are and all of that, you obviously have to have experience with that type of asset and that particular asset class and the asset vintage. Do you find yourself straying outside of, let's just take the vintage, for instance. I don't know what your buy box is, but if you have a deal that seems like a good asset, but it's older than what you've done before in the past, will you look at that asset? Or is this something that you don't, like a lot of investors, they don't want to go past 1980 or invest into anything earlier than 1980 because, again, typically you have a lot more operational expenses and repairs and things that happen just from having the old mechanicals and such. So I'm just curious your perspective on understanding the asset type and the asset vintage, and do you stray outside of that? And how much do you push those budgets if you do stray outside of it? Just curious your perspective on all of that.
Yeah, so we've always operated between the 1960s to the late 1990s assets. So Class B to Class C assets, that has always been our bread and butter. So a more value add approach. In terms of repairs and maintenance, it's definitely true that older assets need more repairs because of the systems, right? You'll see more no copper plumbing, and then the electrical wires are also aluminum instead of copper. There are definitely fundamentals of the assets that just are worse in older vintage assets than newer vintage assets. But at the same time, your going in cost basis is also different. So the amount of money that you need to spend to buy the asset is different. And most often it's actually cheaper to buy a older vintage asset than it is to like try to repair one, because you have to put in the work and then you also get the value of putting in the work up front. So essentially, we're comfortable with doing kind of Class B or Class C assets as long as we model it correctly on our underwriting, right? We know we put more repairs and maintenance expenses onto the older assets. We put a bigger renovation budget onto the older assets. And as long as those numbers still make sense, then we're comfortable with doing both.
Yep. Yep. That makes sense. And I'm curious how granular you get with this. Do you break it down where it's so much per unit you're anticipating on a year to be able to maintain that property? Like for plumbing, for instance, one of the line items that always seems to bite you in the butt is the supply lines. Maybe they're galvanized and it's corroded and stopping up, and or the drain lines, right? They're cast and they've started leaking, right? So those types of things, you never know what condition is inside of the walls. So I'm just curious, do you have a breakdown on a per expense type basis like that, where you're getting that granular that we can expect to spend this much on this type of, or this vintage of an asset because it has these mechanicals in there?
Yeah, we do get very granular when it comes to especially plumbing, because as you mentioned, the galvanized plumbing, it's really expensive to replace and you have to break open drywall sometimes. And the repair is not just the plumbing itself, it's also like the wall and the painting and all of that. And so we do get very granular when it comes to repairs and maintenance, because that really is the moving target, right? Property taxes, insurance, you know, upfront, you just have to be very conservative when you underwrite increases for those year over year. But repairs and maintenance is really the moving target that if you shoot it correctly, then you're going to be fine. But if you miss by too much, then your deal can totally flop upside down. So we try to get as granular as possible. Every inspection before we buy the deal, we bring our general contractors in, we bring our plumbers in to the inspection for them to see how much it would cost if X, Y, and Z broke and see what the current conditions of the units and the building is. And so that really helps us with underwriting. From my side, underwriting is not a one-man job, in my opinion. It's really getting the opinions of everybody, the property manager, the on-site manager, the construction manager, and then one person collecting all those opinions and then putting it into a spreadsheet to see if the deal still makes sense at that level. So we never do things as like a one person job. It's always a teamwork of gathering everybody's opinions.
Yeah, no, I couldn't agree more. There's definitely an army that needs to go into maintaining and bringing some of these properties back to life. What are some of the things that popped up in your past career that, or the past projects, I should say, that are just, oh my God, I can't believe that happened? Or is there anything that stands out as far as being a moment where, y- again, these are just, who could have seen that this was going to happen? Has anything come to mind like that at all?
Probably COVID.
Yeah, yeah.
During COVID, it was a tough time because I do operate a lot of my assets in Southern California and a more tenant friendly area and market. And so during COVID, we got even more tenant friendly than, than before. And so we couldn't really do much rent increases and we couldn't really do much tenant relocation, which were important aspects of our business plan. So that definitely took a pause and elongated our hold period, but it's something that, no one really expected, right? And
Yeah.
I think in the beginning, everybody got hit pretty hard and got hit with the unexpected, but we also got the economic boost from COVID as well when Fed lowered the federal funds rate to basically zero. So that definitely helped in terms of rent growth and exit strategy. So I would say I didn't see COVID coming, but definitely got hit and definitely got the other side, the benefits of it as well.
Yeah, yeah. Let's jump over onto the acquisition and the capital side of things. So you obviously had this upbringing through actually managing and operating the assets. What were some of those things that you might have struggled with or not realized how big of a leap this was, if there is anything that even comes to mind when you made that switch more onto the acquisition side of the table? Is there anything that really was a big learning curve for you, would you say?
I would say acquisition is not so much because it's just modeling in front of a computer. I would say more importantly is capital markets and building relationships. From where I started, I didn't have much like corporate America experience. So it was more just family capital coming in, right? So I didn't have to really pitch anybody or really build much or nurture much relationships. And so as I started the capital markets, are going to events and network with people, network with family offices and high net worth individuals. I had to set up certain systems of follow-ups and nurturing that was important in order for them to, one, remember me, and two, trust me enough to invest with me. So that was definitely a learning curve on the communications and networking side of things. I would say that's probably the biggest learning curve I had.
Mhm, mhm. And so you're setting up all these like emails and these automations and all of that. Essentially, this all comes down to marketing. Would you agree with that? Is that kind of the core behind your capital side of things and building those relationships? Would you agree with that?
Yeah, the CRMs and the email marketing and the follow-up and the newsletters are definitely important, but also the way you present yourself in front of the capital partners, the way you talk to them, and just manners that you wouldn't really have experience from just at home or in school. It's more things that you learn by actually talking to those people, and you learn when doing the job, right? The way you present yourself, the way you pitch a deal, the manners that you have to present, and how you tell a story, how you craft that story, how you find the right group of investors, right? Which conferences to go to, which conferences are more of a waste of time and stuff like that. So it's definitely a lot of little nuances that comes from actually doing the job and going to events and talking to people.
Yeah, yeah. What are some of the events that you would say are good to go to when you are looking for the capital side of things, or you're looking to be able to break into that or looking to acquire more assets? Are there any that come to mind that you feel are better than other ones?
Yeah, so I really like the bigger national conferences. So like IMNs are really good. The annual NMHC is really good. Some iGlobal forums are also really good. So more of those national events that one gets hosted annually, and then two gathers people from all over the world actually to come to these events. I'm less so inclined to go to like local meetups or like free events in a sense, just because the quality of investors are a little bit different. And I focus more on the ultra high net worth to family offices. I source checks between $500,000 to $5 million. So I'm not
Right.
necessarily looking for an non-accredited investor or an early engineer, lawyer, or doctor. I'm more looking for an established, higher position,
That's sophisticated.
person in a firm. Yeah, more sophisticated, and so and a longer term relationship as well. For me, those bigger events and more national events are much more worth my time. And my deals, I don't like to have a lot of investors in my deals. I typically have less than five investors. The most I think
Mhm.
I've had is five investors on a single deal. And then we invest together, my family office, their family office coming together. We build a great relationship and we do things long term. So I'm really, when I go to these events, I'm really looking for those sophisticated investors who invest in real estate before and probably built very successful businesses outside of real estate as well. And that can more connect with me and build relationships and do deals together for a very long time.
Yeah, yeah. Do you feel like I guess there's a sense of commonality, right? Like you have your family office, obviously that kind of puts you into a certain light in front of other people. And like you just mentioned too a minute ago, how you maybe these people have built businesses outside of real estate as well. So very entrepreneurial type mindsets, right? So do you feel like that commonality I guess it gets back to the old saying, like birds of a feather flock together. Do you feel like finding your people, the people that you connect with, the people that you might have commonality with, is that one of the prerequisites? I don't want to say prerequisites, but the type of connection that you're looking for when you are bringing in a new partner, right? You want to make sure that again they have the right type of mindset and everybody's on the same page and this other guy isn't coming in from completely left field. So I'm just curious how you go about qualifying people to bring into the deals, or is it, simply that they've got the $5 million check? I'm curious how you go about doing that.
Yeah, it's not necessarily a prerequisite or a checkbox because it's not, oh, if you're not entrepreneurial or something like that, then I block you out of the door. It's definitely not like that. But like from a success perspective, right? It's much easier to connect with people who you have commonalities with. And that for us as a family, it's more the entrepreneurial route. One is I'm a pretty young person and doing real estate. So from an investor perspective, you have to be a little bit entrepreneurial in order to even get comfortable with investing in me, right?
Mm.
I'm not like the 70-year-old veteran who's been in real estate for the last 50 years and that might be who you want to be if you're who you want to invest with if you're more like a safer investor, less entrepreneurial. But for me as like an emerging fund manager, my investors are naturally more entrepreneurial, more willing to take risks in order to more or less invest in a person and invest with a long-term gain rather than a one-off deal, right?
Yeah.
So just from a success basis, like it's worth my time more to spend time with connecting with people who have commonalities with me. And that often I find is where I gear towards most of my attention. With that said, we do have investors who write smaller checks, like the 500,000 investors who are more on the safer side and want to know exactly what X, Y, and Z business plan is going to be, how exactly we're going to execute and stuff like that. So I'm comfortable with talking to everybody, but definitely from a success basis, definitely the ones with commonality is easier to get.
Yeah. Yeah. I couldn't agree more. Yeah. And it's more fun dealing with people that you have that commonality and similar interests and all of that. So that makes perfect sense. I feel like this is a good time to maybe switch over into our life crafting segment, which again, this is where we ask what is the highest ROI activity that you feel that you have in your life? And we can get into some of the steps that you use to be able to achieve whatever that might be. So, we went over what this was before we started recording here, but what comes to mind as being one of those things that you feel in your life is really powerful to be able to either drive you personally or professionally?
Yeah, man, I'd love to give two things. I hope you don't get mad at me for
No, no, I love it.
the first is listening to podcasts. And the reason I love listening to podcasts is because one, you get a lot of knowledge from podcasts. And two, it's something that doesn't really take too much of your time or it can be done anywhere, right? For example, I visit my properties once every month, all of the properties. I have 34 of them. And a lot of times I would have to drive close to an hour to get to one of the properties. And during that hour, it's like you really have nothing to do. So I would
Mm.
put on a podcast, put it at 1.5x speed, and then I can listen to 3 episodes. So that's something that I feel I can do just in my downtime, not have to set aside certain amounts of time to do it. And it gets a lot of knowledge out of it. So I love listening to podcasts. And recently I got into being on other people's podcasts and sharing my knowledge. So love doing that as well. And the second thing that I love doing is playing tennis. So I grew up
Mm.
playing tennis, played it since I was 6 years old, played it at MIT during college as well. I think tennis for me is a way to relax and hang out with and reconnect and hang out with a bunch of my friends. At this point, it's like everybody leads their different lives. Not everybody is in the same industry. And so it's hard to find that time to reconnect and just reconnect with friends and see what's happening in their lives and what's happening in my life. And
Mm.
so tennis is an excuse to do that, right? It's like a free weekend, everybody gets together. We all have the commonality of playing tennis. We all played tennis growing up. And so it gives us a chance to reconnect and clears my brain from real estate as well. It gives me a break, a much needed break for the week and recharge for the upcoming week as well.
Yeah, yeah. Couple of things there. So you mentioned obviously podcasts. What are some of your favorites, would you say? What do you learn or which podcasts do you learn the most from? And I'm assuming that based on your answer, your goal with the podcast is to learn. It's not just to listen to something that is decompressing or relaxing. Is that typically the type of podcast that you gravitate more toward, more of the learning side of things?
Yeah, for sure. So my podcast is basically all business, all learning. So I'd love to listen to the Wall Street Breakfast, for example. It's a very quick, I think 2, 3 minute podcast that just tells you what's going on in a macro level, any headlines from the Wall Street Journal. And then I also listen to what's happening in the stock market. I love listening to the Best Ever podcasts. They do a daily podcast where, you know, different people of various areas of real estate, not just multifamily, come in together and talk about it. And so I can learn a lot about the struggles of different asset classes and different markets. And I love listening to startup podcasts as well. Being a young guy, I love innovative things. And so having the knowledge of what's going on in the AI world, what's going on in the startup world is also very intriguing to me. And that all fits together to an entrepreneurial attitude into conducting business, right? It's gathering knowledge from a macro level and then gathering industry knowledge and then seeing what our competitive edge is and seeing what other people's competitive edge is and what other advantages that we can learn from others and, what we can share as well. So definitely more of
Yeah.
a learning process.
Yeah. I love that. And that's the same way I've always been my entire life too. I love just always pushing the boundaries and taking nuggets from here and seeing how I might be able to apply that to whatever it is that we might be struggling with at the time. One of the other things too, and we can end it here, you mentioned that you like to listen to these podcasts as you're going out to your properties and doing that monthly check-in. I'm just curious from the monthly asset management visit or however you want to refer to that effort. I'm curious, what types of things do you look at when you visit the property on a monthly basis? Are you just checking for a general condition? Are you checking in with the team? What does your process look like for doing that monthly check-in evaluation, whatever you want to refer to it as?
Yeah, so it's a two-way approach. The first is what happened in the previous month, right? What happened in the past? So the delta between what last month's P&L and rent roll looks like and what this month's rent roll and P&L looks like. And then the second thing is forecasting what next month's and the month after next month will look like. So I ask my property managers to be super close to their assets. And so that oftentimes leads to them building relationships with tenants and really understanding each tenant's situations. That's really important, especially in economic downturns, because we can actually predict delinquencies and other things from building those relationships. So I oftentimes ask property managers is we're at 97% occupancy today. What can I expect if I come the same day next month? Are we going to be up or are we going to be down? What the word X delinquencies today? What am I expecting next month? And so we try to forecast what's going to happen and prepare our budgets or make adjustments to our budgets in accordance to that. And another thing that we try to always do is we have to really understand what the big picture strategy is. If we have a goal that we need to hit by a certain number of time, we always checking where are we to hitting that goal. If it's, for example, an exit in 3 years, right? And it's year 2.5 already, right? So it's okay, now we need to prepare the building for sale. So does that mean start touch up work on the exteriors? So what are our near-term and long-term goals in terms of the business plan? And we always try to prepare that and prep that beforehand in our monthly meetings, in our monthly on-site meetings, and we also do weekly check-ins as well.
Yeah, yeah. And typically, how long do these monthly meetings last? And even the weekly check-ins, what do those what do those consist of? Again, if you have 34 different properties, and maybe you have different property managers that are managing multiple properties, but I'm just curious, what length of time are you typically spending on each one of these various different types of meetings?
So the weekly meetings are pretty fast. They're about half an hour to 45 minutes. I ask my property managers to send me an email before the weekly meeting just to lay out what we're going to talk about and what's the current condition of the rent roll, the P&L, and the asset. And so going into the meeting, I already have an idea of what's going on. It's not like I'm going in blind. And the monthly meeting is more having face-to-face connection, right? It's okay. So how's this asset doing? I want to see the condition of this asset and how the tenant's doing and all of that. So they typically won't last for longer than an hour for the weekly meetings and longer than maybe 1.5 hours for the monthly meetings, depending on how big the asset is.
Got it. Yeah, no, that makes perfect sense. If people want to learn more about you or your company or anything that you're into, what would be the best way to reach out and get in touch with you?
Yeah, I'm very active on LinkedIn and I also can be found on my website, www.motivaholdings.com.
Beautiful. So yeah, this is a fantastic conversation. Again, we dove into many different areas here, and it's always fun getting and have these conversations with other experienced operators because again, a lot of people glance over all the operational side of things and don't really necessarily understand how these assets truly work. So love being able to dive in and understand how you're doing things and what you're looking at and exposing that side of things to all the listeners. So certainly appreciate that.
Thank you so much for having me.
No problem. Thanks for joining us on this episode of Invest in Square Feet. We hope you had as much fun as we did and walked away with some game-changing insights for your real estate journey.
Whether you're listening to this on your computer or sneaking in a quick podcast break, it's all about squeezing in the most out of your day, right? If you enjoyed this episode, hit the subscribe button, drop us a review, and share it with your fellow real estate addicts. We'll be back next time with more stories that'll spark your investment fire and tips to help you live your best life. Until then, keep leveling up both your knowledge and your relationships.